Hi everyone, welcome back to the channel. It's gonna be a quick video about Tesla and we're going to talk about their new target and other news around it. Stay tuned and let's hop right into it. First of all, Tesla stock has gained a lot of ground back this week, recovering from as low as $540 to breaking $700 few times. Currently, Tesla stock is priced at $698 after a 5% upswing in the pre-market action. First thing I wanted to talk about is the new Tesla target released by a Newresearch analyst, Pierre Ferragu. Let's just quickly listen to what he had to say about Tesla and their new $900 price target.
Joining us now, Pierre Ferragu, analyst at Newresearch. Pierre has a buy rating on the stock. He upped his price target to $900 this morning. Pierre, good timing. Congrats on that. Why up to 900 and why today?
Hey, Wilfred, thanks for the question. So why today? Well, our job is really to do fundamental analysis and catch these opportunities where the market is getting concerned by like shorter term risks and catching that moment the market will start looking back at longer term perspectives. So today the stock is down with the rest of the market, more than the rest of the market, because investors are concerned about things like market share losses in Europe. Investors are concerned about delays in the ramp up of new factories in Europe and in Texas. And we think these concerns are very short-sighted. And the reality is that delays in production are not going to stop Tesla from being able to produce 2 million vehicles annually in 2023. And when we get there in 2023 with 2 million units, what we see in the traction Tesla is getting today is that there will be more than enough demand to sell these cars. So Tesla will still be supply constrained at 2 million units. That's what we take from seeing the success of Model 3 in the US that is now very well established, how strong the ramp of Model Y is everywhere else in the world. And so on that basis, we think in 2023, Tesla will be in a position to print $12 of earnings per share. And that flows directly from 2 million units. So our high conviction is 2 million units. And that's more than 50% above where expectations are today. So that means we'd have like 2 years of very, very strong earnings revision. And so what we see happening in the next 12 months is short-term concerns are going to get behind us because these delays in factory ramp-ups, these market share losses in Europe are things that are not going to last very, very long, just maybe a couple of quarters. And beyond that, we'll have a very, very steady stream of earnings revisions. And what you see is that Tesla today, considered like a hyper-growth stock, is probably going to maintain a multiple between 50 and 100 times earnings. And that's how you get to this like fairly exciting target price of $900 in a year from now.
The Newresearch's analyst thinks that the $900 price target is reachable within a year from now. He also added that demand for electric vehicles, Tesla specifically, will be so high that the 2 million delivered vehicles mark will be achieved by 2023 after seeing the success of Model 3 in the United States. In his opinion, Tesla will likely generate around $12 of earnings per share in 2023, which would be a huge increase from a current earnings of 80 cents per share. It is also worth noting that the analyst's previous target was $578, which was given in October 2020. As we know already, that target has already been achieved, so the $900 price tag wouldn't be a big surprise for Tesla investors in the upcoming months or even weeks. In the interview released on 12th of October 2020, Ferragu was also asked if Tesla can actually become the most valuable company in the world, to which he responded, quote, "It's difficult to say. Alibaba and Amazon have massive leeway in terms of growing their businesses, so when Tesla is at $2 trillion or $3 trillion in market cap, Amazon and Alibaba could be, actually, larger. But I think the stock will be larger than Apple, larger than Google, larger than Facebook, larger than Microsoft, without any doubt." Adding to this report, here is a short clip from CNBC which tells you about 3 factors that make Tesla ahead of its competition.
Automakers are making big bets on an all-electric future, and one company has already taken the clear lead when it comes to battery innovation. Phil LeBeau has the exclusive details of a new study. Hey, Phil.
Hey, Becky, you know, I get this question a lot from people. They say, well, why is Tesla considered the leader when it comes to EVs, and in particular, the lowest cost for making an electric vehicle? It's all about the battery. New research from Cairn Energy Research Advisors, which tracks the EV battery industry and the supply chains. Look at this. For every lithium-ion battery cell, the average price Tesla pays $142 per kilowatt hours, well above General Motors and way above, 24% above the global EV industry average. Three things are helping Tesla. Obviously, we talk a lot about the Gigafactory. We were just out there a couple of weeks ago. It continues to grow in size. The size and scale of Tesla's use of battery cells gives them a cost advantage relative to everybody else. It also has relationships with three suppliers. To a certain extent, it can play off those suppliers off of each other. And then there's Elon Musk's relentless pursuit of even lower costs. So even though Tesla is closing the gap with or GM is closing the gap with Tesla over the next decade, Musk and Tesla are expected to stay in the lead.
The scale allows them to keep the advantage, but remember, they're not just designing around the cell, around the battery. They're designing around an integrated pack. And you see other car makers starting to do that too. GM is doing that, VW is doing that, but Tesla is doing it in such a way that does give them an advantage going out 10 years.
You heard Sam Jaffe talk about battery pack cost. That's the other aspect. It's not just what you pay for the battery cell. It's how much it costs you to put it all together into a battery pack. And here you see the latest forecast from Cairn Energy Research Advisors. It expects Tesla to be in the lead all the way through 2030. Now, you do see that General Motors closes the gap, and by 2030, Tesla is expected to be down to $106 per kilowatt hour on the battery packs, GM at $115, and then you've got the industry, which is going to be paying much more per kilowatt hour for its battery packs. As you take a look at GM and Tesla, keep in mind that General Motors has a new Ultium battery plant that's going to be starting in Ohio next year. That will help them with the size and the scale as it starts to close that gap with Tesla. But make no mistake, Andrew, the industry knows that Tesla is in the lead, and that lead is expected to continue throughout this decade.
I hope you enjoyed this video. Hit that like button to see more content in the future.